Welcome back to the show. Somebody roll that beautiful intro.
Digital Perspectives with Brad Kimes. Come on in.
Welcome back. You could follow us on X, YouTube, and DigPerspectives.com for exclusive content. Right now, $3.41 trillion market cap for crypto. The market is off 2.1. We see Bitcoin 107,000 plus, Ethereum 2,400 plus, XRP 217. We're off 1% on the 24, up 0.9 on the 7-day. Look at the range of price, ranging between 217 and 222, which was an important price point that Dark Defender had pointed out. We hit that yesterday and maybe even overnight, but we're at 217 at the moment. I do want to remind everybody about Caleb and Brown, ladies and gentlemen. Great institutional grade custody that you don't have to pay for. You know, there's no sense in paying for these things. There's no sense in getting hit with hidden fees and hidden spreads. And you don't have to worry about any of that at Caleb and Brown. And they have insurance too. So listen, this is something that DAI and myself have come together on. All you need to do is go to XRPwealth589.com, XRPwealth589.com, and sign up and open your free account today. You get multiple layers of security, as you can imagine, and you get human customer service. I don't know what else to tell you. This is an experience unknown to me until I got to Caleb and Brown, and I won't stop talking about them because they're that amazing. And stay tuned. I will be having Caleb and Brown on the show very soon to straighten out some misinformation that's been going on in the community. Stay tuned, ladies and gentlemen. Stay tuned. Here's President Trump right here. Says he started interviewing candidates for replacing Fed Chair Jerome Powell, and he's going to tell you why. Because he won't cut the rates, which means we have to refinance the debt for the country, and it's going to cost us billions and billions of dollars because he refuses to cut the rate, even though the market conditions are there for it. Remember, President Trump is not asking for something that no one in the world is getting. The European Union has already cut rates 10 times. And Jerome Powell is refusing to do it because they're the winners. They're the ones that get all the money if they don't cut the rates, right? So that's the fight going on there. Now, with that being said, let's listen to him, and then we'll move forward.
You were criticizing the Federal Reserve Chair before coming to this summit.
Yeah, I think he's terrible.
I was wondering if you've begun interviewing different candidates for the Fed pick.
Yeah, I know within 3 or 4 people who are going to pick. I mean, he goes out pretty soon, fortunately, because I think he's terrible. We have no inflation. We have a tremendous economy. Hundreds of billions of dollars of tariff money is pouring in. Factories are being built because they don't want to pay the tariffs, so they're building them all over the country. I think we're close to $15 trillion. I told you 5.1 trillion from the Middle East alone, but of investment money coming in. There's never been anything like that in the history of our country. But we have no inflation. And we have borrowing because Biden, stupidly, they did short-term debt. So we have borrowing coming up. And, you know, we'll go 10 years, maybe longer, maybe shorter, but we'll go a long period of time when we do the debt. And because of him, because of this guy, we will have to pay for years. We'll be paying for him. And I said to him, listen, there's no inflation. He says, but maybe there'll be some. That's true. I said, if there is some, what you do is raise the rate. I'm okay with that. You raise the rate in 2 years from now or in a year from now. But because the rate's high, we have to pay more for debt. It's pretty equal. In other words, if it's 4%, it's 4%. If you drop it a point, you'll pay 3%. So it's fairly equal, not necessarily, but fairly equal. So we're going to end up paying maybe 2 points or 3 points more. 3 points would be about $900 billion a year because of this very average mentally person. He's an average mentally person. I'd say low in terms of what he does, low IQ for what he does, okay? Wait, so instead of paying $900 billion, we don't want to pay 900 just because he doesn't want to lower the rate. I said, if there's inflation in 2 years or 3 years or 1 year from now, you raise the rate, you take care of the inflation, among other things. But he's probably a very political guy, I guess. I don't know.
It does feel like that's exactly what's happening because he was doing whatever the administration previously needed done. That is your tell right there. Now, nonetheless, I'm showing this because we know that there's going to be changes coming to the Fed. I think that's quite obvious. Ray Charles could see that at this point. Now, with that being said, there's other big changes coming too. We saw Jerome Powell, which we reported on yesterday in the last couple of days, talking about bringing down the reputational risk caveat inside of their guidance that will stop the debanking narrative, because that's been huge. And then we had an admission from Jerome Powell saying that banks could, in fact, come off the sidelines and start offering crypto services, which they will, by the way. I'm telling you, they're going to. They've been watching all their clients for more than a decade. You can bet your bottom dollar they're getting ready to. And they'll start with something like stable coins. But this is a reminder because we're moving to an on-chain economy. This is why the debt has to be reconciled. This is why we're seeing the United States debt being tokenized on the XRP ledger in conjunction with Ondo and BlackRock, right? All of that is happening. You know, it used to be just a concept where people laughed at us about the debt of the United States being tokenized on the XRP ledger, but now it's happening. And now, on top of that happening, we're starting to see a presence, whether it's stable coins or CBDCs around the world, show up on the XRP ledger. And I think this will continue to proliferate. And this is where the real volume actually comes from over time, is once you have a stable coin representing every region and country and government, or a CBDC, then you can begin to see the massive amounts of daily money flows, because we need these instruments in order to have values to exchange on these new payment rails, right? So, and that includes the tokenization of stocks and bonds, real world asset tokenization as well. So I'm just highlighting it because I believe all of this stuff is working in tandem together. And as a reminder of all the stable coins you're seeing beginning to proliferate on the XRP ledger, remember Ripple and the XRP ledger already have 90% of the FX market. They already have it connected. The plumbing is there. All they need to do is start ramping it up and turning it on. That's really what we're talking about here. Meanwhile, let's get an update at where we are with all the bills in Congress. Here's Senator Lummis.
Services Committee, as well as stablecoin legislation. And then the House Ag Committee has put out commodities legislation. So they're really ahead of us in terms of their committee work. We're ahead of them in the fact that we have passed through the Senate the Genius Act, which is focused on stablecoins. And so I hope now that they're comparing the stablecoin legislation that their Financial Services Committee passed to the Genius Act, and we can work together to figure out a path forward for both market structure and the Genius Act. Now, I'm not saying combine them, but they both need to pass this year. I know that there is enthusiasm at the White House for having the Congress send them a win in the area of stablecoins. And I'm very confident that the Genius Act that we worked so hard to get past the Senate is a high-quality product that is worthy of the president's signature.
So there's that from Senator Lummis. Now let's hear from Senator Bill Haggerty, who actually brought the Genius Act to the Senate.
And it's very different from the House. The House can move this with a majority. They may be able to bring some Democrats along when the Democrats know that it's going to pass. That's not the case here in the Senate. It took months of work to get the point that we did, to get this across the 60-vote threshold here in the Senate, and we just did that last week. Here's an opportunity for a win. Here's an opportunity to build momentum. And frankly, we've got multiple jurisdictions here in the Senate that will have to come together, form committee meetings. It's going to be complicated here because of two committees that have to be involved in this, and it's going to take more time. I think my advice to everybody would be, let's take the win now, let's build momentum, and then let's dedicate our time to going further as market structure and other opportunities present themselves.
You know, with that being said, that what I see is taking shape is we reported yesterday that Tom Emmer, the GOP majority whip, said that they are considering putting the stablecoin bill with the market infrastructure bill and run them through together. And if they do that successfully, it is going to save an enormous amount of time and deliberation. If they don't, I think we're going to be looking at getting all the legislation done by the end of the year and not by August. But by some miraculous path, because this is not normally how Congress works, and I know you know that, it would be amazing, right? I mean, so let's see what they do. Let's not get so hung up on them getting it done by August, but I would love that. That is the goal. I do want to see that happen, but I'm not going to be heartbroken if it isn't, because I believe it gets done this year regardless. Now, with that being said, Wall Street Journal's picked up on what we've talked about here. We covered this yesterday or the day before. The big loser from the Genius Act is the $156 billion crypto giant Tether, because they will be forced to do a proper audit, which they've never done, right? And we've even heard Senator Haggerty, when reported on this channel, with him saying it might be easier for Tether to just start a new company and introduce that new company into the United States rather than try to get Tether in compliance. I'm guessing because things are that disarray behind the curtain. Meanwhile, what about that Bitcoin strategic reserve? Take a listen here.
Washington.
You know, one thing, if I can jump in on this, Cynthia, and Cynthia's Bitcoin Act, I think may actually end up being the one that we move forward on because of the strategic reserve that is there. And President Trump has done an executive order on that, and Cynthia's leadership is so vitally important on that. Now, here is one thing, and it involves everyone that is in this audience. The more accepted Bitcoin becomes, and then people realize there is an opportunity to take these assets that have been the confiscated assets and really put the base in place for a strategic reserve, and how it helps us hedge against currency risk, how the growth helps us deal with the debt. These are becoming components that are more widely received as more people have their blue wallet on their phone and they're looking at the value of their Bitcoin, and the importance of President Trump moving forward with that and Cynthia's leadership to codify that action, I think has a significant impact. And
it does have a significant impact, and I'm sure they're going to do it. And listen, they're not going to just do a strategic Bitcoin reserve. And remember, U.S. Treasurer Scott Bessent told us when the strategic Bitcoin reserve was first announced that Bitcoin would be the first in, but it wouldn't be the only asset. So let's understand that there's a luster there that's kind of, it's not just exclusive, right? It's starting with Bitcoin, which I totally get it. But then you have the U.S. digital asset stockpile. But here's the other thing. Look, they need to have an adopted strategic reserve, because if you don't, what utility keeps Bitcoin alive? This is not maxi talk. I'm asking an investor question, right? What happens to the shiny #1 Bitcoin position if they can't secure strategic reserves with countries and governments? It'll be a problem. So I definitely think it'll happen, and I think they'll do it to try to conflate the price of Bitcoin to literally help pay down the debt, which means that everybody buying Bitcoin will be helping to pay down the debt at some point, if that is the case. We'll see. But nonetheless, let's not forget about utility, which is about to be the new next chapter of this digital asset space, ladies and gentlemen. Utility. And if your project doesn't have any, you may want to rethink what's going on here. Because once utility becomes the price driver for this market and these assets that have it, the question only will be which project has the best utility or solves the best problem for utility. That's what we're talking about here. And what do we know? DTC's Central Securities Depository has recently achieved a remarkable milestone by surpassing 100 trillion in assets. This is unbelievable. And as DAI says here, shout out to the GOAT, and all of it will be tokenized on ledgers, including the XRP ledger. Absolutely it will. And you guys know it, right? You guys absolutely know it. There's a nice thread here, but I'm just going to give you this. You know it's there. Depository Trust Clearing Corporation. There it is. XRP XLM. You've heard it. You remember when they said it. And don't forget about the XRP depository receipts. Remember, a wrapped security instrument to give clients inside the DTC access to XRP as a security instrument. Yeah. How about that? Also, they can help settle that 2 quadrillion plus every year. And remember, one of the most powerful things is that we do know that, what did they say? I'm going to go right here. Ethereum blockchain and others like Ripple and Stellar. I don't need to play it again. That's where this is. What I want to play for you now is this clip right here of Dan Dunney laying it down. Let me get to right. 1 second here. Actually, right here. I have this set up. 1 second. I promise I do. All right, I'm gonna let it play from right here. I want you to hear it play out. And at the end of this thing, he's going to tell you something very powerful. Remember, I'll remind you after this. I'm telling you, watch out. This ain't over by a long shot. I got something for you. Utility.
The CEO, Frank LaSalle, and the board had foresight that, hey, this is a disruptive technology that can fundamentally change the way we do business. We need to harness that technology. So they acquired Securrency not as the only technology, but as a foundation.
Securrency was formerly owned by who? Ripple. Yeah, and then the DTCC bought them.
Especially a foundation for how you do regulated assets on which we could blend together the other technologies, distributed ledgers, smart contract frameworks, tokenization frameworks, to create a coherent marketplace. So they're forward leaning in that model. As I mentioned to you, the one right to win that DTCC has in this model is we are the record keeper for quadrillions of dollars of transactions, but for fundamentally assets under record, approximately $100 trillion worth of assets. So unilaterally, without the need to engage anyone else, we can actually make it possible to tokenize $100 trillion worth of value.
There you have it. They don't need anybody's permission. We can tokenize $100 trillion worth of real world assets with a push notification. So, done. That's what he's saying. That's what he's saying. And again, as I said, you know, I love the idea of these reserves and all of this talk coming out here. I love the idea of all of this, but it's utility that is going to be the price driver, ladies and gentlemen, of this market. And it will be in short order once this legislation's passed. Call it August, call it the end of the year. We'll call it wherever you want. But one thing I know is that you can call it utility, because that is what's next. Not financial advice from me or anyone else. It's just my digital perspectives. I'll catch all of you on the next one.